I recently bought 300 Intel stocks. I bought them after the stock lost 33% in the first week of August. My average price was $20.54. Over the last 2 weeks, Intel lost another $2, although it recovered that money plus gained a little bit in the last 2 days. After the Fed announced its first rate cut of 50 basis points in the last 4 years, Intel lost as much as 3.26% in one session. Although I am not in red at the moment, I somehow believe I am in trouble. My investment in Intel will cause me a lot of distress, at least in the short term. As I look at Intel's valuation, I see that the stock is undervalued by 35% when considering its intrinsic value. The intrinsic value of Intel is a little over $32 per share. The intrinsic value is very important when considering the true worth of an asset. Intrinsic value is calculated based on a company's financial health and performance, instead of looking at a stock's current market price, which can change due to people's temporary market sentiment. Intrinsic value helps you understand if a stock is truly good to buy or not. However, Intel has a relative value of about $43, which is much more encouraging than its intrinsic value. Relative value is the estimated value of a stock based on various valuation multiples like PE and EV/EBIT ratios. It offers a quick snapshot of a stock's valuation in relation to its peers and industry. Based on these two valuations, I can say that my money will double if Intel attains its relative value. It will gain only 50% if Intel reaches its intrinsic value. I will take 50% provided Intel recovers within a year. Now let us look at how Wall Street values Intel as a tech company. This is where my stress comes from. Intel's lowest forecast for the next 1 year is about $17. That is about 18% below my purchase price. However, if the economy is good and the tech sector performs well, the stock may not fall further, but rise towards its average forecast. The average forecast is over $27, which is a gain of 31% from Intel's price today. But the best that could happen to my investment in Intel is the stock gradually moves its highest forecast, which is over $61, and proposes a staggering 194% upside. If you remember, Intel traded above $60 at least twice during COVID-19, but that was a market primarily boosted by the government's COVID allowance. I do not count it as a real price indicator. It is very likely that Intel will not hit Wall Street's highest forecast anytime soon, especially when we consider its current state of affairs. This is where things get messy. Intel's annual revenue has fallen by $54.2 billion, or 14%. Its operating income has fallen by $31 million, or 99%. Its annual net income has fallen by $1.7 billion, or 79%. It was not a surprise. As we can see, its net income shrunk 92% over 3 years, 92% by 5 years, and 84% over 7 years. Things were not well with Intel for a long time. If this trend continues, Intel will suffer terribly, and my investment may lose as much as 33% in the next financial year. Over the last 1 year, Intel's operating cash flow has also shrunk by 26%. Its investing cash flow is down by $24 billion, which is about 135% decline from the previous year. Investing cash flow shows the cash generated by or spent on investment activities. Investing activities include the purchase of physical assets, investments in securities, or the sale of securities or assets. Intel is not investing. In August, it said it expected to cut capital spending to $21.5 billion in 2025, down 17% from this year. It also issued a weaker-than-expected third-quarter forecast. This is how serious the situation is with Intel. It has paused its European chip plant. It has laid off 15,000 employees and will stop non-essential work. It has planned a 35% cut in its sales and marketing department recently. It sold its stake in ARM Holdings to cut costs. The stake was not a big one, probably around $150 million to $200 million. Intel sold 1.18 million shares of ARM and sold them in the second quarter of the year. If you look at ARM's share price, we can see that much of it was probably not the best time to put your assets on the market. But Intel has come to such a critical financial situation that that small amount of money is also valuable to it for survival. Intel's free cash flow scenario is a disaster. For the last 3 years cumulatively, Intel has had a negative free cash flow. In 2024, Intel's free cash flow is down by over $12 billion. Intel's dividend is also called very unsafe, while its buyback yield is also in the negative. This difficult financial situation probably impacted Intel's insider transactions. While Intel's insiders have not sold any shares of the company from their stock holdings, they bought shares worth of under only $1 million in the last 12 months. This is where I think I have made a speculative investment in Intel. My 300 shares in Intel will be a loser. I am ready to give it a year time before accepting my loss and moving my money elsewhere. At this moment, my profit target is not even its intrinsic value, which is $32 per share. I will part with my shares for around $30. That will be such a relief. Are you an Intel investor? How many shares are you holding? What is your profit target and timeline to reach that target? Leave a comment below and subscribe to my channel. Thank you.